Hi there traders, this is Steve Miley for FX Explained and our regular weekly macro watch roundup of all the macroeconomic, geopolitical developments and financial market movements over the past week, and looking out into the week commencing 30th of March as we end Q1 and move into Q2 into April. Well, first of all, we're going to start a look at the macroeconomic geopolitical developments, and critically, the ongoing spread of the COVID-19 coronavirus continues to dominate headlines. Current epicenter still in Europe, but quickly shifting to the US now. Both the British Prime Minister Boris Johnson and Health Secretary Hancock have both tested positively for coronavirus. Those symptoms are understood to be mild at the moment. The surging cases in New York and the tri-state area of New York, New Jersey and Connecticut has even seen President Trump consider a quarantine of this area, to which New York State Governor Cuomo stated, "I don't think it's legal, and it would be a federal declaration of war." Practically all European nations are in some form of lockdown, with restrictions on public movement and work from home rules enforced. Panic buying has subsided to an extent with the lockdowns, but some civil unrest is starting to surface, notably in Italy. Global central banks have slashed interest rates to or close to zero, and we've seen various government measures globally for fiscal stimulus and protection measures, the latest being the $2.2 trillion economic stimulation package passed in the US on Friday. The aim remains to protect businesses and workers from the inevitable economic slowdown that the lockdown restrictions will create. The economic slowdown has already been highlighted in the data, with a record 3.3 million weekly jobless claims numbers in the US on Thursday. This is Americans filing for unemployment. Now let's take a look at the global financial market developments. We've seen the S&P 500 try to rebound in here, with daily swings still up between 5 and 10% for the major global markets, but we have seen a recovery theme for global stock averages over the past week. However, a weak close on Friday does leave these markets still vulnerable to the downside. In the forex space, we've seen the US dollar recoiling back lower. Remember, the US dollar surged higher during the liquidity crisis the prior couple of weeks, but over the past week, the US dollar recoiling back lower, with the risk currencies, Australian, New Zealand dollars, particularly strong in their recoveries, as we're seeing here. But also we've seen the euro recoil against the dollar, having seen a big sell-off in euro dollar down through to close to 106, now back above 111 for euro dollar. And that aggressive pound sell-off, GBP USD selling off down to its lowest level since 1985, down close to 114, but now rebounding back up close to 125 in here. So a surging rebound from the pound. Gold has also recoiled back to the upside in here, having sold off from around $1,700 down through $1,500, recoiling back up to $1,700, partly due to physical technical supply issues in the physical underlying gold market, alongside a reaction to the weakening again of the US dollar. The oil price, however, stays very low. WTI poised at the $20 mark, still at its lowest level since 2002. And also in the commodity space, despite a rebound in copper, we've seen that rebound start to stall at the end of last week, and real risk for further copper base metal vulnerability going into this week and April. Now let's take a look at what we're looking at for the week commencing 30th of March. Well, we're going to keep our eye on the spread of the coronavirus, COVID-19, within the US, within Europe and elsewhere, and also the impact of the lockdowns that we're seeing across Europe and the US, and again globally. The government and central bank support for financial markets and for the economy needs to be monitored, with further developments potentially helping markets. And we're also going to keep an eye on the liquidity risk in global financial markets, particularly if stocks start to go lower again. Keeping an eye on that US dollar. We saw the strength, then the recoil back lower for the dollar. Certainly keeping an eye on that going into this week and into April. Elsewhere, the oil price needs to be watched, particularly with it still poised at that key $20 mark. For the week on the data side, jobless claims has become very important now. We have that again, the weekly data on Thursday, so we're certainly watching that. Either side of that, on Wednesday and Friday, we have global market and US ISM PMI data. Going to be more important now as we're seeing the real reaction from businesses to the lockdowns and to the global impact from the coronavirus spread. And then on Friday, we get the always watched employment report, coming more up to date now, seeing the impacts of what's happened in here from March. So an important probably second half of the week on the data front and watching those developments, watching the price action. As I say, the global market manufacturing and ISM manufacturing PMI data Wednesday and Friday. Critical US jobless claims on Thursday and the US employment report Friday. I'm going to say to you guys, please be safe out there. Stay safe with your families. Please adhere to those lockdowns in your area. I'm also going to wish you a great trading day if you're still trading the markets and a great trading week. But be careful, markets are still very, very volatile in here. And I'm going to urge you, please, to follow us on our YouTube channel and maybe take a trial of the market chartist reports that we publish and you can access via FX Explained. Until next week, have a great trading week. Stay safe. And I'll be back next Monday with another macro watch. So traders, don't forget to catch us on the next FX Explained macro watch and all the great content on fxexplained.co.uk.